there, welcome back to my channel. My name is Brittney Bundles, and today's video is going to go over 3 credit cards that I recommend you applying for if you are looking for a credit card and you have challenged credit. There are many reasons why people take out or apply for credit cards. You know, being a former loan officer, I've made multiple videos about my experience working in the financial industry and how credit cards definitely can help to build your credit. And it can also tear down your credit as well if you're not using them correctly. So I do recommend credit cards for those that are looking to rebuild their credit or build their credit. But that's not the only thing that you do need in order to build a healthy credit profile. Like I mentioned in some other videos, the credit score is not the only thing that matters. When a lot of times when you are looking to obtain a loan or when you're looking to obtain like a line of credit, pretty much when you're looking to finance anything, the credit score is not the only thing that matters. Like I mentioned, you can obtain a really high credit score by getting a credit card and using it correctly. However, it still may not be that strong of a credit profile that you need to purchase a home, or that you need to purchase the car that you want, or that you need to take out a loan for your business. So just keep that in mind. But if you are interested in 3 credit cards that I recommend you applying for if you do have challenged credit, be sure to give this video a big thumbs up. Please make sure that you are subscribed, and let's get right into the video. So like I mentioned, today we're talking about credit cards and 3 ones that I do recommend some of my clients to apply for if they are looking for credit cards. Now, like I mentioned in the beginning of the video, everyone has a different reason as to why they're applying for credit cards. Some people are applying for credit cards because they actually need the funds. They need additional spending power. They want something and they don't have the capital to actually purchase it, or they want something and they don't want to spend their money on purchasing. You also have people that they want something and they don't want to spend cash because they want the rewards that come along with a certain credit card, whether the rewards be additional flight miles, or maybe you get 5% off X amount of dollars that are spent in this certain category, such as maybe groceries or beauty, or whatever the case may be. There are so many cards out there, and there are so many different ways that you can earn points. And there are some people that strictly want credit cards so that they can earn more while they're shopping. However, I do, like I mentioned, recommend obtaining credit cards if you are looking to rebuild and also build your credit, because they can definitely help you do that. The thing is, though, when you damage your credit, when your credit score starts to drop, and not just your score, but when you start to see the overall credit profile, for example, like let's just use Credit Karma for an example. I really don't like using Credit Karma because Credit Karma doesn't have your exact credit score, and it throws a lot of people off. But on the flip side, Credit Karma is a good tool and app to use if you are wanting to see a layout of what's going on with your credit profile. So again, your credit score may not always be accurate through Credit Karma, but it still is a good tool to use to kind of see your overall credit profile. If you start to look at your credit profile and you're seeing that your credit card balances, the ones that you do have, are over 30%, some of them are maxed out, some are over the limit, you're adding collections, and your score is dropping and it just doesn't look good all around, then there are some things that you can do to start clearing that up. There are a lot of people that have made videos and also promote the action and the idea of not paying off your collections. I don't agree with that. Like I said, being a former loan officer, looking at your payment history and looking how you do handle collections and how you do handle trades or certain accounts when you are granted credit, or when you are granted a certain service, even if it's not credit up front, such as maybe like a cell phone service, and you don't pay it and it goes to collections. A lot of loan officers will look at your payment history. They will look at the story behind, why this account went to collections. And sometimes it could just be a one-off. It could be something that you went through during the pandemic, which is understandable, or something that you went through as a result of trying to pay medical bills. You didn't have the additional funds to pay certain bills, but they do look at the overall picture and how you carried out your initial agreements and obligations, because this is the thing here. A lot of people would ask, well, how do you decide who you're going to approve and who you're not going to approve? The loan officer writes up what the loan is for and writes up the recommendation as to if it should be approved or declined. the underwriter is the one that typically approves the loan. And when they're looking at different information in regards to your loan or in regards to the credit card, a lot of times they do take into effect how you treated previous obligations. So if you're someone, if they're looking at your account and yeah, your score may be going up if you're utilizing the credit cards correctly, but if it shows that you have a habit of not paying certain bills or certain accounts, such as credit cards, it may be very difficult for you to get another credit card, even if your score goes up. It may be because they're looking at what you have done in the past. And they're wondering, hey, are they going to do me the same way? Are they going to do our company the same way if we extend credit? Because they did this to these companies, what makes us different? And so having a hard time, people understand that, right? But building a pattern is something else. So that's something that's looked at. So I don't recommend not paying off your collections. I really don't. So I said all that to say, if you are at the point where you're paying off your collections, you're wanting to be responsible with your accounts, you are wanting to rebuild or build credit, and you're finding that it's challenging to go ahead and get a credit card, I'll say this too. One challenging spot to be at with your credit is wanting to rebuild the credit and not having an opportunity from any institutions to be able to get a credit card or a loan to do that. So some people do get starter loans or credit builder loans. Some people also get different secured cards, which we're going to talk about in a moment. But I wanted to put that information out there. So the first card that I would recommend applying for is through Merrick Bank. It's MERRICK Bank. There are clients that I've worked with after doing research, and they were able to get approved with like a 575, 580 credit score. And that's, again, the credit score is not the only thing that a lot of lending institutions look at, but a lot of people that have come to me initially wanting to learn how to build business credit, I've given them options and different recommendations. I do recommend, even if you're looking to build specifically your business credit, I recommend you building your personal credit as well. Why? Because a lot of institutions are going to want to use your personal credit to secure the loan. They're going to want to run your credit. And like I mentioned, typically the way that the institution that I used to work for did it, and a lot of other institutions, the way that they do it is they do use the your initial personal credit as the applicant, and then they'll go ahead and add your business credit or your business on as the joint applicant, or vice versa. But it is really important to still build your personal credit and not neglect that, only striving to build business, because like I said, a lot of different institutions are going to want to run your credit as well as your business for different things. So I would definitely apply for Merrick Bank. I don't believe that Merrick Bank has any annual fees. I would definitely do research on all of these cards though. I'm not an expert in these cards. I just have done some research, and I have worked with different people that have applied for these cards with lower credit scores and have been approved. So Merrick Bank. Another one is Capital One, and it's a secure credit card. This is a card that I actually obtained. Years ago, I did get a Capital One secure credit card, and I put $200 down on the credit card, and I used that to build my credit. How did I use that to build my credit? Well, I got the credit card, I put $200 down. They sent me the card. I had a $200 credit limit from the amount that I put down, so that's why it was secured. And then after, I think it was like maybe 6 months or a year, my credit limit increased to 500. And I think at that point, I don't know if it increased again. I have to check the credit limit on it, but I didn't use it to make large purchases. I used it to keep it active, because if you don't use your credit card, sometimes the card issuing company will go ahead and cancel the cards, and it kind of defeats the purpose that you're wanting, that you initially wanted the card for, which is to build your credit. So I did take out the Capital One secure card, like I mentioned, and I used it for not just gas. I know a lot of people say gas, that's why it kind of popped up in my head, but I used it for, what can I think of? Fast food sometimes. Sometimes I used it for different like phone cases on Amazon. Small purchases is what I used it for, so that I would not go over 30% of the credit limit. I only had a credit limit again of 200 initially, so I didn't have too much room to work, within. So my purchases were small so that I didn't max it out. Now, if I would have got that card and maxed it out, that would have been something different. It would not have built my credit in the way that I was hoping that it would build it. So you do want to be sure that even if you're not maxing it out, but if you're close to the limit, let's say you're at like 189, that still isn't good. in terms of wanting to build your credit or rebuild your credit. So if you do get a credit card, be sure to utilize it correctly so that it actually serves its purpose. And then the last card that I'm going to go over is Destiny MasterCard. Now, Destiny MasterCard is a card, I think this probably, besides a secured card, this may be the second to easiest card to obtain. A lot of clients that I've worked with through business consultations have obtained a Destiny MasterCard. The only downside that I hear, and also when I researched Destiny MasterCard reviews, is the fact that they have an annual fee that's already included in the balance through Destiny MasterCard. So let's say that they give you a credit limit of $200 for an example. That $79 is going to be deducted from the $200 balance. So you're already going to have a balance on your card. But sometimes, depending on your credit, you may have to either go a secured route, like I mentioned with MasterCard, or you may have to pay the annual fee or any fee up front. And sometimes you just have to do that again, like I mentioned, based on where your credit is at. And it's a building block to actually get you to where you want to be. Now, there are additional cards that you can look at getting once your credit gets rebuilt, like an Amex or American Express. I say Amex just as an abbreviation, but a lot of people enjoy using their American Express card for miles, for different cashback perks, also for their business. You can definitely add on different authorized users to your cards and things like that. And a lot of American Express cards do have annual membership fees as well. So I'm not saying steer away from annual membership fees or anything like that. I just wanted to let you know what a recurring downside of what a recurring statement was in regards to the Destiny MasterCard. People were saying under reviews, and also I have heard firsthand that they did not like the fact that they were charged a fee up front. I'm pretty sure it was an annual membership fee, but I'm not 100% sure. I just know that there was a fee around $79 that was deducted from their initial card balance. So keep that in mind. But again, if you do use these cards correctly, it can definitely aid in helping to build or rebuild your credit. If you do want more videos like this, please let me know down below. Also, if you do have fairly good credit and you are wanting to learn more about the type of credit cards that you may want to apply for that do have great interest rates, and not only interest rates, but also great cashback perks and different point perks, be sure to leave me a comment and I can create a video going over those cards as well. Another thing that I do want to mention with all these cards is the fact that the interest rates are typically higher. The interest rate is going to be based on your personal application. So you do want to make sure that you're cautious of that as well. And just know when you are purchasing something, you're paying more for that purchase because of the interest if you're not paying off the balance, immediately. So you can pay off your balance immediately. I don't recommend doing that either. I do recommend having a balance left on your card. But again, I would make sure that the balance is definitely always below 30% of your credit limit. So again, if you have any questions, feel free to leave them down below. Thank you so much for watching, and I will see you all in the next video. Bye.